All right, I'm here. I'm Clint Hendricks with CREDC, and this is another in our series of webcast around the COVID-19 podcasts that are focused on resources to small businesses as we go through these changing times. I have with me today on the podcast Keith Meyers from Perkins and Company, a CPA firm. I'll let him introduce himself. And what we will focus on today is navigating the CARES Act. And Keith will take us through answering some of the key questions that have come up and come to us at CRDC, to him. Our goal is to hopefully answer a lot of those questions that you have around the CARE Act, which will be noted throughout. Things are changing daily, sometimes by the hour. So Keith will do his best to give you the most up-to-date information in this podcast. With that, I will turn it over to Keith to introduce himself, and then we'll start through his questions and hopefully answer some of the questions you guys have out there as you go through this.
Thanks, Clint. Appreciate the opportunity to talk to you and the folks that tune in on this. As you said, I'm Keith Meyers. I'm a shareholder at Perkins and Company. We're a local accounting firm headquartered in Portland, but we do a ton of work in Southwest Washington and have quite a bit of presence there. Several of my partners work almost exclusively in the Southwestern Washington area. So enjoy the opportunity to talk to you and the folks tuning in. Thanks, Clint.
Okay, no, that's a great segue into our questions, and really I want to start with at the highest level. Keith, if you could just tell us about what the options available in the CARES Act that's going to help the small businesses and help them survive the shutdown that's going on in the state of Washington, and of course the stay-at-home orders. But let's start at the top. Can you give us kind of an overview of what's available through the CARES Act?
Sure. The CARES Act, as pretty much everyone knows now, was signed right at the end of March, and it's a $2 trillion program. And it is designed primarily to assist companies during the shutdown period, not just companies, but individuals as well. I think we'll probably concentrate for the most part on the company, small business aspects of this, but some of the other aspects I've noticed even in the last couple of days that people have been starting to get their $1,200 checks, $2,400 for individuals that are filing joint. Those are going to appear in the checking accounts of individuals here on a daily basis as things get going. So for folks listening in, go ahead and tune in on, take a check at your checking account to see if anything's showed up from the federal government on the positive side. So also a small segue here for individuals that have maybe not filed their 2019 return yet and have always paper filed maybe in the past. It might be an opportunity for you to go ahead and file your return even though it's not technically due until July now, and make sure that you have the bank routing numbers on that filed return. File it electronically. In those situations, that should increase the likelihood that you're going to get that money way sooner than you would have gotten otherwise. But as far as the CARES Act for small businesses, I would there are 3 or 4 areas that we should concentrate on. The first is most people have understood that there's something called the Paycheck Protection Program, which is a $350 billion funded portion of the CARES Act that provides pretty much immediate relief in the area of receiving loans to cover payroll. These loans are, for the most part, forgivable loans. So we'll talk about that a little bit farther on as we go through these questions. The second thing is that the CARES Act has liberalized and provided additional money to the Small Business Administration for their disaster loan program. And this provides companies the ability to receive funding that they might not have otherwise had access to in order to stem the tide during this slowdown and close down period of time. It's relaxed the underwriting through the SBA and provided some additional funding. In addition, there's a credit, $10,000, not credit, but a $10,000 grant that's a part of this program that even if you might not qualify for the loans, you can still get access to that grant. And then finally, there's been a lot of tax liberalizations to allow companies to accelerate the deductions for the purchase of equipment and other capital expenses for their companies. Liberalization on the carryback of net operating losses and other such functions. You should probably talk to your tax advisor. There should be some benefits that you can get immediately from this. In addition, the employer portion of FICA can be deferred until 2021 and 2022. You should look into that. If you have a payroll tax provider, they should have that information available for you as well. So Clint, that's sort of a very quick rundown on some of the highlights of the CARES Act.
Okay, no, great, Keith. And with that, I'll go to the next question. I think a lot of small businesses are asking is understanding that do they have to choose between the PPP or the Payroll Protection Program and the Employee Retention Credits? How do they know what the best option is regarding those options?
Okay. Well, you're right, Clint. Those are two programs that are somewhat mutually exclusive. Once you apply for the Paycheck Protection Program, then you cannot also then apply for the Employee Retention Credit. So the question that we've had from several of our clients over the last week or so is, well, which one is the best for us? I would say for the most part, the Paycheck Protection Program is probably going to provide the better source of funds, the higher source of funds, and the quicker source of funds than the Employee Retention Program. However, there could be situations where you might choose one over the other. If you have a lot of employees that are, by and large, low wage earners, then the Employee Retention Credit might be a better option for you. The Employee Retention Credit provides up to $5,000 per employee, assuming that you pay them $10,000 or more during the period of time starting March through the end of 2020, so the rest of this year. That can go and offset the employer's portion of FICA taxes, Social Security, and Medicare. So for most employees, that will cover a lot of their costs. Let's say that you have 10 employees that you pay at least $10,000 to. That's $50,000, 10 times $5,000. That is a credit to go against your FICA taxes. So that's something that you will reap the benefits in over the remainder of this year. So you should consider that if for some reason the Paycheck Protection Program is just not for you. Keep in mind that there are some specific hurdles that you have to have in order to actually apply for the Employee Retention Credit. You have to have actually suffered a reduction in headcount and a reduction in revenue. And so if that's something that you're interested in, you should consider talking to your tax advisor about the specifics of that and just go through the metrics and figure out which one would be best for you.
No, thank you. That's very, very insightful. And along those lines, as we talk about the Payroll Protection Program, how do you apply, and then also how do you qualify? Can you also update us on what happened yesterday with the program or coming out of Washington as well?
Well, Clint, the activity with the Paycheck Protection Program and updates on all types of information on it happens, it almost seems like hourly. This Paycheck Protection Program is hardly 2 weeks old at this, 2 weeks and change at this point. And it seems like a lifetime ago that this all started. The Paycheck Protection Program, as I had previously mentioned, there were funds of $350 billion set aside. Well, it looks like as of sometime yesterday, those funds have basically been exhausted or will soon be exhausted over the next few days. So most banks have suspended the process of actually sending those loans into the SBA. It doesn't mean that they're not continuing to accept applications at this point. Most banks, and I've heard from one banker from one of the local banks here yesterday, they were pretty confident that additional funding from Congress would be coming relatively quickly. As we all know, we're never quite sure what's going to happen in Capitol Hill and how long it will take for something like that to happen, but definitely there's legislation at the committee levels. I don't believe anything at this point has made it to either the House or the Senate floor, but I would assume that from everything that we've been able to understand that there should be more funding coming, and it should be coming within the next week or two. At least that's what we hope. So I'd recommend that anyone that has considered or in the process of applying for the Paycheck Protection Program, that they should continue with that process. How you apply, the application process, it was set up to be an SBA administered process, but the gatekeepers are the banks. These are the SBA lenders that are licensed with the Small Business Administration. Most of the banks, and probably the primary bank that you work with, is probably is an SBA lender. And so the first call you should make is to your banker and talk to them about their application process. Most of the larger banks, the application process is moved to online. So you would go through their online process in order to at least begin the application process. You qualify pretty much, I won't say automatically, but if you're a business that has been affected by the shutdown, then you qualify to apply for the Paycheck Protection Program. The application process is, at least on paper, very easy. I will definitely tell listeners to this webcast that every bank has a different bent on how they administer it, what type of information and what type of documentation is required in order for the application to be completed. Some have long, sophisticated Excel spreadsheets that need to be filled out. Other ones have no spreadsheets at all. Some require a lot of documentation and some require very little. So it's really on a bank by bank basis. And so you'll need to basically apply at the bank level and follow their guidelines. There's no requirement for you to only apply to one bank. If you find that your bank, for whatever reason, isn't the best option for you, you can shop around. There are other banks that, even though you may not be a customer of that bank, that they will take your application. Most banks, however, are going to look at their clients first. So I would recommend, if you're a customer of a bank, you have a good relationship with them, then you should talk to them first and do everything you can to apply through them. That they are the best place to, and the best choice for you.
No, that's great information, Keith. And I want to reiterate something Keith said, is that, you know, if you're in the process or hadn't filed for the PPP, you should still do so, as there potentially will be additional dollars added, even though they're concerned about running out of dollars at this point. So please continue to apply. And then Keith, I think, brought up another great point, is if you are not able to submit it to your own bank, other banks would accept your loan application, your PPP application, so you don't have to necessarily only apply at your current bank. So keep that in mind. That's great information. To that end, how much and really how do they calculate the loan amount, the maximum amount? Does the bank do it? Does the business do it? And do they need an accountant's help to calculate that? Can you explain that a little, clarify a little bit on that, Keith?
Well, I can try, Clint. The law itself was written relatively straightforward, but as with anything, the devil's in the details. In general, what you would do is, this is primarily, as the name implies, a loan in order for you to continue to employ people during the shutdown period. So the entire aim of this program is based upon payroll. So in theory, you should take your average payroll on a monthly basis, multiply that average payroll by 2.5 times, and that in essence is what you can borrow from the SBA, the maximum amount you can borrow from the SBA through this program. It is it's a loan that is underwritten entirely by Small Business Administration, so the banks themselves are not on the hook. So it is requires no personal guarantees or anything else, and it basically, as we've discussed before, there's a good chance that pretty much that the vast majority, if not all of the loan, can be forgiven as long as the funds are spent the correct way. So as far as payroll is concerned, originally the law basically said you take the last 12 months of your wages and average them. Once the rules came out last week, the SBA liberalized that to the extent that you can just use your 2019 information, which a lot of time is a lot easier for people to get. And more importantly, it's a lot easier for the banks themselves to actually receive the documentation required, because primarily they're going to go off of payroll records. And the payroll records primarily that they're looking at is their payroll journals. If they have a payroll provider like ADP or Paychex or one of the others, then you can just utilize the information from them, along with your federal payroll reporting, the 941s and the 940, which is normally what is also asked for by the bankers for the type of documentation required. A lot of the questions we've had were, well, what does payroll exactly consist of? Is it gross payroll? Is it net payroll? What other things are included in it? In a nutshell, we've heard, and this is stuff that's been clarified over the last several days. In addition, it doesn't mean that everything's clarified, but the most part from what we've received is it's gross payroll. So it's total wages that you pay, including the employee share of FICA and their withholdings. However, it does not include the employer share of FICA taxes. So Social Security and Medicare is not included in that, the employer's portion of it. It also includes health insurance costs, including deposits to HSAs, anything that basically is deducted pre-tax from the employee's paycheck is included in there. That will also include any retirement plan contributions, 401k matches, things like that are also included in there. Payroll is, however, per employee capped at $100,000. So if you have employees that make over $100,000, you'll need to cap their wages at $100,000. You basically go through all those gyrations over the entire year, add them all up, and then divide by 12 to get your monthly average for 2019, and multiply that by 2.5 to get your maximum loan amount that you would actually input onto the SBA form. The SBA form is 2 pages. It's very simple and only has a couple of lines that actually have numbers on it. The rest are check the boxes, yes and no, and a signature on the second page. So the actual application is super simple, and it's made to be super simple. So you don't need anyone's help necessarily to complete the actual application form. But sometimes you're going to need the assistance of your payroll provider and maybe your financial or your tax advisor to assist you with some of the details on making sure that you get the right amount of your average monthly payroll. That's normally for our clients where we've had the biggest number of questions.
No, that's a great detailed explanation. That will really help. I think a lot of businesses who are not sure how to wade into the CARES Act, the PPP, and going from one end of the spectrum with multiple employees. If someone is self-employed, can they still apply for a PPP, or is that not for the self-employed?
Yes, they can. And that was something that, though it was in the law, it was, well, let's just say not well written, or at least not clarified very well. But they came out with clarifications just this last week on that. Self-employed people can apply. And they're saying, a lot of times they'll say, well, sure, Keith, but I don't get a paycheck. So, you know, I just get whatever's left over at the end of the year, and hopefully that's a positive number. And so for those employees, their wages are in essence considered to be their self-employment income. So if they file a Schedule C on their individual tax return, their income for the purposes of calculating the loan is going to be their self-employment income as it was reported on their Schedule C on their 2019 individual tax return. Of course, just like with any other employee, that is capped at $100,000. So they're going to, in essence, the maximum loan amount is going to be somewhere around $20,000 for them because of that $100,000 cap on a 2.5, you know, on a, in essence, it's 1/12 of that multiplied by 2.5. Now, a lot of self-employed people also employ other people. So the other employees' wages will be considered in addition to that, along with retirement plan contribution, health insurance, all those other costs that we talked about. So that'll go into it as well. So the other expenses will be calculated just the same as if you were not self-employed, but you were an employer. Those are, I think, for anyone that is self-employed, especially if you have employees and you've been affected by COVID, this is something that you should definitely take advantage of.
No, that's awesome. Thank you for that explanation. It really clarifies, I think, an area, like you said, that a lot of folks have a question on being self-employed. And again, we're still on the PPP here, is if the loan is funded, other than payroll, can any other expenses, can it be used for any other expenses, or are these funds specifically for payroll?
They're primarily for payroll, we'll say. You can use, the rules have come out in that you must use at least 75% of your funds for payroll that you receive from the Paycheck Protection Program. The question is going to be, well, gee, Keith, what can I use the other 25% on? And the other 25% can be used to pay primarily rent, utilities for your business during this period of time, interest on any mortgage, or loans that have been taken out for the purchase of equipment used in the business, including vehicles. So you can utilize those funds for those purposes. You must utilize these funds over the 8-week period following the day that you receive these funds, when the loan is taken out, basically. So you have a short window in order to do that. But I think for most people that can be done, and it should be done. Keep in mind that there is a slight difference between the question of what can I use the funds for and what usage of these funds will be used to calculate the amount of forgiveness on the loan. So because of this, we have started recommending to our clients to, once they get this loan funded, they should probably segregate these funds into a separate account, separate checking account, and to the extent possible, pay these funds out of that account or reimburse out of that account your regular checking account for the use of these funds, just to make sure that there is a good tracking mechanism in place in case you are audited or in case the bank itself or the SBA asks questions down the line on what the funds were used for. But I think for most companies, as long as they keep the headcount up for their employees and they use the funds adequately and they keep paying their people, we might go into this later, but the other aspect of receiving forgiveness is the requirement that you must pay each employee at least 75% of what they were paid during the previous quarter. Now that might create a couple of issues. I had one client that we talked to yesterday that had some concerns about this because this company itself did their annual bonuses during the first quarter of every year. So in the first quarter of 2020, they did their annual bonuses to their employees for the 2019 year. Well, that tended to increase the average wages for these employees in that first quarter, which is going to be used to compare to what you would pay them in the second quarter, which doesn't have any bonuses. So in those situations, you might need to, I don't know, maybe for the 2020 year, you might accelerate your bonus program into that quarter in order to make sure that these employees are paid 75, up to 75%. You would, I think in a nutshell, you're going to need to talk to your provider and talk to your tax advisors and do some calculations to make sure that you're staying within the guidelines in order to get as much of this loan forgiven as possible. So you can't put this thing on autopilot. You're going to have to take a look at it, especially during this forgiveness stage, to make sure that you're adequately utilizing the funds.
No, that is great information to have, because so many folks ask about the forgiveness portion, how it's calculated, and what they have to do to make sure they can access the maximum forgivable portion. Another question, and now we'll move to, if a business is already shut down and don't know if they can reopen, should they still apply for the loan, for PPP or EIDL or any of the loans?
Yeah. Well, if you're shut down now and there are concerns about your ability to actually open back up, then I think you're going to have to actually go through the hard question about, well, is it viable for me as a business to borrow money if I'm really not sure I'll be able to pay it back, or there's just no mechanism for me to get there. So there might be a situation where if you're shut down and it's just going to take too much to open back up again, you're going to have to go through that hard math yourself and just figure that part out. I think, however, for a lot of businesses, they anticipate to reopen again. They might be shut down totally now. But as we've seen, there is light at the end of the tunnel, hopefully, and within the next few weeks, there's an opportunity maybe for a lot of these businesses that have been shut down over the last 30 days to start opening up again. So if you're in that situation, I would definitely look to see if you can acquire the funding, the actual cash funds needed in order to get yourself back up and running. And the Paycheck Protection Program can do that because it will allow you to rehire those furloughed employees or replacement employees So you can get staffed up in this interim and to pay them to assist you and get everything ready to get opened up again. Even though they may not be doing what they normally would be doing in that process, they can do other things in order to assist the business owner to get back up and running. So you can still utilize those funds to pay payroll and to pay rent and to pay utilities and to pay any of the other qualified expenses during this 8-week period. So in that case, the Paycheck Protection Program would still be a viable option for you. Also, you can take advantage of the disaster loan program, which is, even though it's not a program that has a forgivable portion, the SBA is still looking to assist companies that can't get funding anywhere else. And I mean, that's what the disaster loans are for. So for those companies, they can still receive funding. The first $250,000, even in these things, do not require personal guarantee from the owners. So I would really recommend for individuals that really do plan to get back up and running and have a path that they can see to get from point A to point B, to take advantage of these disaster loans as well. Do some good budgeting and forecasting so you can understand how much funds you need and if the funds are going to be available to do that, and that you can sort of bridge the gap between where you are now and where we think we're going to be 6, 8, 12, 14, 24 weeks from now, assuming the things get back to at least some semblance of normalcy.
No, that is great advice. And just one last question along those lines is, if they've laid off or furloughed most of their employees, will that affect kind of the calculation for the forgiveness portion of the PPP?
Our understanding of this, and some of the specific rules are still a little fuzzy, but the theory is that if you've laid people off during the last month, let's say, I mean, there's a specific period of time, but basically it's once the shutdown happened, that you're going to have a lower head count now than you did before. Maybe you'll have a head count of 0 now because you've laid everybody off. But as long as you replace those people that you have just laid off or rehire them back, then as long as you do that by June 30th of this period, then that reduction in headcount for those employees will not count. So you have an opportunity to bring people back on. That's the whole point of this program, is to get people back on the payroll so they're not on unemployment, so they have an employer, so they can get back to work as quick as possible. And more importantly, you as an employer can get them back to work and get things up and running as quick as possible. Not going to happen with everyone in every situation, but that's what this was designed to do.
Keith, that is great information and encouraging, again, to the business owners that have had to furlough or lay off employees. And I'll just reiterate that by June 30th date, that you still have the possibility to access and to use this program. One of the last questions, but then we'll also, if you have anything to wrap up, are there other sources or resources or funds, either in the CARE Act or outside of the CARE Act, that you would recommend for businesses to take a look at, or anything in the CARE Act that is overlooked? We talked momentarily beforehand about carry forward losses, and you mentioned things like that. It sounds like good record keeping is key. But are there other things in the CARE Act or other resources that come to mind that the small business owners may want to think about here presently?
There are a few. There were a lot of changes in tax law, liberalizing accelerating deductions and expensing of items in order to reduce the amount of taxes, the tax burden individually and for businesses. So take advantage of those. There's also the ability, I don't remember if I mentioned this or not, but between now and the end of the year, to the extent that you're paying wages now and will continue to pay wages during the remainder of this year. The employer's portion of FICA taxes can be deferred. They're not forgiven, but they're deferred for the next year to 2 years. You, in essence, would defer payment of all of these taxes between now and December 31st of 2020. Pay half of the deferment at the end of 2021 and the other half at the end of 2022. Basically, an interest-free loan from the federal government on these employer taxes. So it's a decent benefit, not huge, not going to save anyone, but it's definitely something that will free up some additional cash flow for businesses that are hurting. As you had mentioned, there's a lot of other, you could, if you've had losses that you were carrying forward as a business, you might want to consider the liberalization of carrybacks have allowed, you might be able to get back some tax money that you had paid in previous years in order to provide you with some additional funding. And again, the disaster loan program has that $10,000 grant as a portion of it. So businesses that are applying for loans in that program anyway can get a $10,000 grant. Theoretically, that money should be sent out very quickly. I haven't talked to any businesses that have actually taken advantage of that and received the money yet, but hopefully we will get some anecdotal evidence here of how well it's doing. And I think, Clint, other than that, I think that's the primary business-focused areas of the CARES Act. Now, I think that businesses should take a look at what the state and local communities are doing for businesses. There might be some additional grants or funds available, loan programs available in their communities, and on a statewide basis, they should at least consider and ask. And that's going to obviously change depending upon where the businesses are located.
That is great information, Keith. Let me start I'll open it up if you have any other additional comments or thoughts, but you've been very helpful here. I'm sure the small businesses listening to this can take a lot of notes and take away some great information from this webcast. I'd like to thank you and Perkins for allowing you to come on and give us your experience and knowledge with this constantly changing situation with the CARES Act as well as the COVID-19. I would also say to anyone listening to the podcast, to the webcast, that go to the CREDC.org website because we are constantly updating it daily, hourly, with new information as we get it and resources. So I know that CREDC is trying to put as many of the resources out there and information that we have and pass it on as quickly as possible to the small businesses. Keith, any other closing comments?
Well, I will echo that, Clint, that CREDC has, the website itself has had great information almost from the very beginning on this, one of the best sources of information that I've seen, and I visited a lot of websites over the last couple of weeks trying to mine information. So your local community is lucky to have you guys, around and on the case in this situation, providing that very valuable information. So thank you very much for your help to all the small businesses here. All those small businesses mean a lot to us as a firm because, our primary job, as is yours, is to, provide what help we can to make a small business as successful as possible. I think the only other thing I would say in closing is it's going to be important probably now more than ever for you to keep track of your funding, your spending, maybe do a little bit more planning than you're used to or you would like to do when it comes to cash flow planning. But I think it's very important for you to mine your dollars and cents during these next couple of weeks as we try to get back to some semblance of business normalcy.
Well, thank you, Keith. That is great advice from beginning to end of this webcast. And I will sign off and thank everyone for tuning into this webcast. Thank you again, Keith. And again, go to CREDC's website daily as we update it daily and hourly as information comes in during these times. Thank you for tuning in, and hopefully we will talk to you soon and on some of our other webcasts. Thank you.
Thank you.
Welcome everyone to the latest CREDC webcast. Today we will continue to focus on how to navigate through these challenging times of the COVID-19 crisis. We're going to focus, we'll have one of our local CPAs on board with us here today, and that is with Drew Barrett of Barrett and Company CPAs, who will help us understand better some of the pieces of the CARES Act, as well as any other thoughts and answering some of the questions we found are kind of common out there as we try to help you navigate through these perilous times. I'm going to let Drew introduce himself, and we'll start from there. And then after he does that, I will start with one of the first questions and take us through a couple of key questions we think you would love to hear answers on from someone with Drew's experience and background to help you navigate these changing times. So Drew, welcome. And
thanks for having me, Clint.
Yep, we'd love to hear some of your background.
So I've been with Barrett and Company for over 10 years now, and our firm is local, rooted in with our headquarters in Camas, Washington. We serve clients all throughout state of Washington, as well as all throughout Oregon, and we really focus in 4 key niches. The first being construction, which, as we know right now, is being impacted greatly in the state of Washington specifically. We also work with a lot of manufacturing companies, as well as in the trucking space, so large trucking companies, and we work in the real estate space. So we have a lot of clients that are real estate developers, own and operate maybe their business out of the piece of real estate that they own, as well as other developments throughout multiple states. And so for us, it's it's imperative to do what we can to serve our clients and ultimately help make their businesses better. And what we found over the last month specifically, really the dynamic of how we're able to generate information has changed, how we're communicating to our clients has changed, and it's really due to one, due to the COVID pandemic and what's been happening, and the rapid changing of information that's been taking place minute by minute. As Clint and I are talking right now, even something could change that we thought was going to be going in one direction that has now been shifted another direction. And so for us, it's important, and to everyone that does watch this webcast, just to know that first and foremost, nobody knows what's going on right now. That's extremely important. We're all trying to take in information the best that we can, first and foremost, and then be able to communicate that to those that we have relationships with in the community, as well as our clients, so that we can all do our best in working together and working through this. And so it's really important for businesses out there to know that they're not alone, that everybody's trying to figure this out the best they can. And the unfortunate thing through all of this is, as things are changing, sometimes not doing things and waiting for a business owner could be detrimental in some circumstances. And we want to do our best in assisting our clients so that they can make effective decisions no different than we would if this wasn't going on.
No, awesome, awesome, and with that, that's a perfect segue into some of the questions we'll explore here today, and I'll just start off at a very high level, looking at really for small businesses, and especially ones that are trying to survive during these times. Can you give us kind of an overview, the options in the CARES Act? There are many pieces to it, but if you could just kind of hit on all the key pieces, and we know today even something new has come out on the PPP, or the Payroll Protection Program. So again, this is an update as of April 16th for that portion of the program. But I'll just hand it over to you to really give an overview of the CARES Act and some of the things small businesses should be aware of as we go forward in applying for or looking at these loans and grants and the different pieces, even including tax things that are in the CARES Act that they might want to explore. So I'll turn it over to you on that first question.
Okay, so I think within the CARES Act, it's a very large document. It's very comprehensive, and all of us are trying to do our best in really understanding what is in the meat and potatoes within the framework of the Act. But to give you guys an idea of the high points, there's really some key focuses that I think, as far as what we look at and what most general individuals and business owners are going to look at, are really going to kind of stand out for everybody that is looking into this, since it's passing a few weeks ago. And so on the individual side, I won't go into that, but we all have a good idea of what's taking place there as far as the individual stimulus checks that are being sent out. When we talk about business specifically, right now, the two main focuses as far as really big opportunities for business owners are, first off, and Clint just touched on this, the PPP program. So the Payroll Protection Program is really the hot item right now that people are talking about, banks are talking about, the media is talking about. And then in addition to that, the Economic Injury Disaster Loan Program, the EIDL, which is administered by the SBA specifically, completely separate program to the PPP. It's actually, believe it or not, it's been around for years, way before all of this happened. It's gotten, but due to this happening in the pandemic, it's gotten a lot more meaning and significance for small business owners that have been affected. And so those two specifically are really the main hot ticket items that people are talking about right now. On the main end, do I qualify for it? Can I apply for both? How does this whole thing work? What do I do? Am I eligible? Am I not eligible? And a lot of that is rapidly changing day in and day out, as far as are there funds available? Are there not funds available? Or there'll be more, is there going to be more funds available in the future? All those types of questions are being asked right now, and we're looking to the federal government to provide continued guidance within that framework. And so, in addition to that, I think some of the big pieces in here that nobody is really talking about, or I should say, it isn't granting as much attention right now. But some of the other items within it are, within the CARES Act, there's information on charitable contributions. In addition to that, there's information on other compensation benefits and just overall payroll relief. There's some information in the CARES Act about the deferral of net business losses for up to 3 years. There's also NOL carrybacks that are going to be allowed for taxable years beginning 2018 and before 2021. There's some AMT, which is alternative minimum tax credit refunds, some technical correction to qualified improvement property. And so there's really a lot of stuff going in there that that us as professionals are going to continue to become more educated about. But as it stands right now, most CPA firms are focusing the majority of their time on helping their clients focus on either the EIDL or combined with the PPP programs, because that's what's the most urgent right now. Because as you guys know, if your business has been unexpectedly shut down, if you've had to, unfortunately, furlough employees, lay people off, and then there's this unknown factor of when or if the business can get started up again. A lot of those day-to-day decisions are being impacted on cash flow, and the PPP program as well as the EIDL program were set up to assist with that.
That's a great overview. And again, there are so many pieces, but the immediate pieces that everyone is focused on is the EIDL loans as well as the PPP. And can you speak quickly to what came out today as far as on the PPP loans, and also the thought that there may be more funding coming in a second round? Your thoughts on that?
My thoughts on that, well, what I heard today was the SBA announced that they were more or less closed for business. And so what does that mean? What that means is the allocated funds, the $350 billion set aside as part of this CARES Act for the PPP program, specific to not only small businesses, but also for sole proprietors and 1099 individuals. That funding has since closed. And so what that means is the SBA has released guidance that they have filled up that quota, and they are no longer going to be funding the PPP program as it stands today, because there is no more money left to be given out. And so when we talk about that, I think the biggest thing is, as far as conversations that I've had all day today with clients, is my advice to all of you watching this, as well as to our clients, if you were not able to take advantage of the PPP program, number one, don't panic, relax, talk to your team, talk to the people, talk to me, talk to Clint, navigate through your resources and see, what this could look like for you, maybe at some point in the future. And at some point in the future, what we're hearing is that the hope is that they're going to be releasing more funds, more stimulus funds for the PPP program specifically, to the tune of $250 billion. And so from what I'm hearing from banks right now is they are working around the clock all weekend for as long as it takes to set their clients up for success in the event that there is an opportunity at some point, hopefully in the near future.
Well, that's great, and that is a great perspective to get. I think some of the other key questions around the PPP and what have you can now be put on hold. Again, hopefully Congress will allocate more dollars to the program, and there'll be another opportunity for businesses to access that. I want to go back in some of the other questions I had for you. I wanted to get that one on the PPP since that just came out today.
Sure.
But I want to just quickly hit on some of the key things that maybe people had asked before But if someone's business, and I'll jump to this question, business is shut down and they don't know when they can reopen, should they still apply for idle loans or any other pieces under the CARES Act?
My answer to that is they absolutely should be applying for it. What I've heard recently on the idle loan specifically is that apparently funding may be shut down on that. I can't say for certain, because within the CARES Act there was 150 billion allocated towards the EIDL loan as well. I don't know if there still is available funding, but I would say if your business is shut down, you need to be pursuing both of those opportunities. Even if you have yet to do so, I don't think it's a waste of your time looking into it and taking some action.
Okay. And then that's, then I'll hit back on, especially if they, and again, we'll still go with the thought of if they were applying to PPP or to idle, if they've laid off or furloughed many of their employees, how would this affect their forgiveness calculation? That is seemed to be a question that's concerned because there are many out here who have applied for the PPP are still waiting and may get it. So that question I think is still very valid to many of the folks out there, to the businesses out there.
It's very valid, and it's a question that we've had a number of clients that have asked that question. It's a question that continually comes up. Our standpoint on that is, number one, the business owner needs to do what's best for the business, and so the business needs to be the most important. And in doing so, there may be decisions that the business owner, unfortunately, either has already made or may continue to make that do not allow employees to potentially come back because there's no work or they don't know when they're going to open. And so you're exactly right, Clint. What will happen, assuming that, let's say I'm a business and I had 50 employees a few months ago. And so we look at me applying for the PPP program for my business. I have the opportunity where I submit all my information timely, and for the luck of the draw, I am approved. And so there's this bucket of funds that are coming into my business. And I look at my business 2 months ago and say, great, well, 2 months ago, I had 50 employees. We had work for them to do. And so it's very realistic to think that at that time, especially when we're looking at the original calculation for applying for the PPP, that, yeah, there's a great chance that I'm going to get the majority of that forgiven. Today, maybe I have 10 employees. Maybe I have 5 employees. Maybe I have 20 employees because I'm a retail business, or I'm a construction business and I'm a home builder, and I can't right now physically send my employees out to the job sites to perform work. And so I'm receiving these funds with a workforce that has been significantly reduced. And so really it comes down to, number one, what's best for the business. And yes, if you still have employees on payroll, or if you decide to bring employees back on payroll, you can still qualify for that forgiveness. The key there is you want to make sure that you feel comfortable and you're in a good situation to where you can constructively have work for those individuals to do, and that there is some relative certainty. Because what will happen if there isn't, what's going to happen is that you may get the majority of that loan forgiven, but let's say, for example, things don't change, or that uncertainty still continues over the next 8 weeks, which is the criteria as far as actually spending those funds. All of a sudden, you're left then with a situation where maybe work does ramp up, or maybe you are able to start adding people on payroll, and you've depleted that cash by keeping people on payroll without really having them constructive things to do. And all of a sudden, you have the opportunity to have those constructive things to do, and you can't pay your employees. And so, long story short, I think it's really important to one, make a decision that's best for the business owner, and then two, understand that the spirit of the PPP program is to keep people on payroll and to infuse cash into small businesses. But the benefit by having the opportunity to qualify for that program is the worst case scenario. You happen to be one of the lucky ones that get funded, and you may have some cash sitting there on the end of it that you didn't or weren't able to have the opportunity to have the relief on, but you have the benefit of having additional cash flow in your business, working capital, and it ultimately is at a significantly reduced interest rate. And so the payment terms on whatever the amount that is not forgiven, the interest is deferred for the first 6 months, and the rest is payable over the next 18 months. So it really is a 2-year loan at 1% interest rate. And so when we look at traditionally, you know, I think Clint and I could spend our entire lives trying to find people that would lend us, or financial institutions that would lend us any amount of money at 1%, and we probably wouldn't have very good luck finding that, because it doesn't happen very often.
No, that's an excellent overview, and again, the thought is that stay tuned to the CREDC website as we try to put resources, information, as we find out more about the EIDL program and the PPP program. We will immediately post it on our website. So again, I think if you take nothing more than from this webcast, it's that things will continue to change daily, and that we definitely want to keep abreast of what's going on. And one of the resources we're trying to provide is coming to our website on COVID-19 and finding where to find answers to as many questions that you have as possible. This is a great point, I think, to say to Drew and ask Drew, are there other sources of funds to consider out there? Then we've discussed different pieces of the CARES Act, but are there other things that you've come across or that would recommend to small businesses that they might look at here in Southwest Washington?
Right now, and Clint would be able to speak on this better than myself. I know that some of the state grants, and I know that the CREDC is working hard to hopefully increase funding and you know, have the opportunity for Governor Inslee to increase that amount. I know there are opportunities there. What I've heard is that the overwhelming amount of interest for some of these grants is, you know, has really it still is putting people in a really tough situation. One, how do we get this money into the hands of the people that need it? And then two, how do we really evaluate what goes into this? Because at the end of the day, everybody's been affected by this in one form or another. So that is definitely a resource to look into as well. In addition to that, it isn't really an immediate opportunity right now, but it's something to be kind of keeping your eyes and ears open about, talking to your tax professional, talking to your network of individuals, and really out in the future at some point, after the 2020 year is over, there are opportunities to look at if your business has a loss in 2020 to be able to offset that in prior years and get some relief that way as well. And so I wouldn't say it's an immediate infusion of cash, but it's one of those things where more will continue to be revealed, and people, if they're networking or utilizing resources like this, they're going to be able to have a better idea of what those opportunities are. Because from what I've seen, and we saw this a lot with our clients, even over the last couple of weeks, a lot of people don't want to watch the news right now. A lot of people, it's because there's, it's changing constantly, and there's a lot of fear and there's a lot of uncertainty. And so what I do know is that when you have those few people that have always been in your inner circle, or those people that you do trust, that when you are able to receive information after they've kind of filtered it out, things do come to the forefront. And we've seen this with our clients as well, where they're saying, wow, thank you guys so much for doing this. If it hadn't been for you, we wouldn't have even known about these types of opportunities. And it's humbling to hear them saying that to us. And I have to put myself in their situation. They're dealing with so many other things day to day that are impacting their lives. And one, they may not have time to look into it, or two, they may not want to look into it because it's just hard to really understand, what's a path I should take and what's a path that I shouldn't take.
No, that's a great way to put it. And you hit on something, and I want to make sure, as you were talking about out in the future, I know everyone is really concerned about the right now, but you were talking about something to the effect of how you might record your losses, or that there will be credits in the future. Can you just hit on that just a little bit one more time? And I know everyone is focused on the now, but that if they should be recording losses or things now, that will be they will be allowed to use as tax credits going forward after we get through this period. Can you hit on that really briefly?
Yeah, I will. And I'm actually going to reference some of my notes too, just so I can make sure that I tell the audience, so I'm not going off of just my memory here. So within the framework of the CARES Act, one of the components was the net operating losses carryback allowed for taxable years beginning 2018 and before 2021. And so when we look at why 2018, the reason for that start was due to prior law in place in the Tax Cuts for Jobs Act. We were not able to look at that 2018 year, and now with the CARES Act, that's opened up the door for that. And so the CARES Act provides an elective, it's a 5-year carryback of net operating losses generated in taxable years beginning after December 31st, 2017 and before January 1st, 2021. And so taxpayers may elect to relinquish the entire 5-year carryback period with a particular year's net operating loss, with the election being irrevocable once made. In addition, the 80% limitation on NOL deductions arising in taxable years beginning after 12/31/17 has temporarily been pushed to tax years beginning after December 31st, 2021, or December 31st, 2020. And so really what it's done is it's taken some of the ambiguities in the Tax Cuts for Jobs Act, which a lot of people have heard of, that happened during Trump's administration, and it's kind of pushed it forward into the future. And so for businesses that do have losses that they're sustaining in a year like this year, they can look at, in summary, they're able to now look at, you know, okay, we had a really good year in 2019. We had a really good year in 2018. Wow, we actually paid taxes at a pretty high bracket in 2019 or in 2018. And we've had a down year this year due to things completely out of our control. And so Congress is saying, we understand that we will allow you to take that and look at prior years to be able to receive some benefit that way too.
No, that's great. Thank you. Thank you for clarifying it. And again, as you were
Sure.
saying earlier, these are some of the things in the CARES Act that folks haven't focused on yet, but out into the future, those are additional things that they could look at. So they should keep that in their mind as they look at what's happening now for that future benefit that was put in the CARES Act, allowing them to have carry loss forwards that they might not have been able to take advantage of in the past.
Correct.
I'm gonna leave it with, if there's anything else, you did a great job of summarizing that things continue to change day by day. So we will continue to do more webcasts out into the future so that we can keep the local businesses up to speed. So I think this is a great ending point, unless there's anything else, Drew, you want to add. But thank you so much. I think you've been great.
Absolutely.
Here, answering some of these common questions that have been out there. And again, we will continue to do these webcasts, CREDC, focused on navigating these difficult times. So thanks again, Drew.
Absolutely.
At Barrett and Company. And thanks everyone for tuning in to this webcast. And talk with you soon. And
Thank you.
We'll go to the CREDC website where you can find up-to-date information daily. So we look forward to you looking there for more information. Thank you.
Is the recording off now?